Hey, it's Sasha Evdokov. It's April 3rd, 2014, and today I want to do a rapid recap. So we're going to do a bunch of different stocks, and we're going to try and go through them pretty quick, and I'll try to include as much detail and commentary as possible, but I am going to try and do this pretty quickly with a lot of different stocks. So let's get started. With that being said, let's move on. So here I am in my panel. TC2000, that's the software I use. A lot of people ask about it. It's just something I use for scanning, watching, charting, sometimes alerts, and so if you're curious, that's what it is, TC2000. So let's start out with Amazon. And Amazon right here, I talked about this stock for a couple weeks. I talked about it when it broke here, and then it tried to retest things, and then it broke again. And this stock hasn't had a great run, especially with the Amazon TV thing launching lately. But all that stuff doesn't apply if the market is heading lower, or if the stock is heading lower, the fundamentals don't apply as much. So even if it's a great company, it does billions of dollars in sales, the fact is right now it's going lower, and it's taking it lower because of the volume, the price action, and the sentiment behind the traders. So that's what you have to always take into account, is always that the technicals will trump the fundamentals no matter where you're at. And for me, this week, it's been a crazy week, so I've only traded a couple stocks. It's this one and Netflix. Boom. So all these stocks that we go over together, I had somebody ask me, do I really hit every single one of these stocks, and do I trade all of them? No, not at all. Let me put it to you this way. Why would you want to trade 100 or 200 stocks when instead you could trade, just one or two stocks and wait for their setups, hit them hard when they break, so the upside or the downside, and let it run, and in a month or two you make your full year's worth of gains in that month or two, and you're only trading one or two or three stocks. Why do you need to manage or look at 20 or 30 or 50 different stocks? You don't need to. The stocks that I'm giving you here and the stocks that we're discussing here are just for you to get some ideas and concepts behind systems, methodologies, money management strategies to take your game further, because it's about you. It's not really about me. It's about making you better, because in reality, chances are we'll probably won't meet unless you're determined to, spend some time with me, do some coaching sessions or something like that. But if you're looking to just trade and you're looking to do your own thing, then really it's about you and taking your game further. Now, I love every single one of you guys, from my Leonards to my Florins to my Steves and my Bobs, to all you guys, to the Michaels, and I don't even know, I'm sure I'm leaving off thousands of you guys, because I get a bunch of emails from you all the time asking me all kinds of great questions. And I love helping all of you, but you got to take your game higher. It's not about me holding your hand and trading for you. So that's why I only do these recaps for now once a week, and that way you can process and digest. So for me, I've been trading two stocks right now, and it's this Netflix and Amazon. That's it. Those are the two I've been really watching, actually. And it's been a crazy week for me. I had a hard drive failure, and I had bees in my wall, and I've had water heater break as well. So house has been kind of crazy. So I don't need to watch 100 stocks. These two on the short side, that's it. Take it for a great run, and you make your year, and boom, done. Okay, now as far as what else has been going on and what's happening, I'm going to start on the short side, and we're going to start with the Dow Jones here. I've been watching this price level. We're hitting near the highs. We're hitting the highs, and it's hitting it on lower volume. It's not pushing higher. If we look at the diamonds, there it is. It's hitting those levels. Look at the weekly. Look at this run. It's a huge monster run. So, we're hitting the highs. If we look at the weekly, the volume is still light, and if we look at the daily, look at this volume thing that I've done. Boom. Declining, descending. That's not usually healthy. It's if it breaks through, it probably will come back, because that's usually what happens. So let's continue moving further. So we had the Netflix. So here, if you did the break, even if you use the 8-day, here's another trade for thought for you. If you would have went in on this when it broke on the second day on the 8-day moving average right here, and just entered it a day later, you would have had an 87-point gain. Okay, so you can use these. So think of it this way: when it breaks this right here, and then it goes lower here, you could have had a 47-point gain. When it breaks higher, you stay with it until it breaks it completely here, 68-point gain. So, you can use these moving averages to trade that way. And the same thing here. Now you get the 50-day moving average. If you're in a longer term trades, use the 50-day. Breaks the 50-day, boom, you would have had 46-point gain. So, other stocks, Tesla here, moved up last couple days, bringing it back down. Even though it broke this, I wouldn't use that strategy or mentality on this, because it's acting weaker. Why do I say that? Because the volume here, we have 10.8 yesterday moving up, and now moving down 10.9. It's kind of even, but still 10.9, 10.8. And what has it been doing lately? It's been going down. So you have to wait for it to consolidate. Great price level would be, let's say 200, let's say 203. If it can get down to 160, or even looking at the weekly, take it to the weekly. Look at the weekly right here. If it can get to this 193, would be great. If it can get to 120, even better. Don't get wrapped into the hype of what everybody's talking about and how high it is now. Look at the big picture. Big picture weekly, last year or two, right here. 120 is a good price. Even 195 maybe would be okay, but 120 would be better, obviously. Okay, so look at the big picture. What's happening? What's going on? Where was it? And what's it doing now? Look at Google. Did a split. Normally, I don't like to buy stocks right away after they split, especially I talked about this one when it was in the $1,000 level and it broke this moving average. Now everything got readjusted on the graphs. So this stock was in the $1,000 price point, and somebody asked me not too long ago about stock splits. So what happens? Now you got 2 shares for every 1 share you had. Let's say you had 1 share. Now you have 2 shares, but you have it at $569 or whatever. If you bought it at $300, then you would have had still 2 shares, no matter where you bought the stock. Now, if you had 1 share, you would have had 2 shares now for a 2-for-1 split. A 3-for-1, you would have had 3 shares for every 1 share that you had. They can do reverse splits too, which is the opposite of that. But for simple terms, that's what happens. But look what happened. Went up, tested this 50-day, went back down. That's usually not the healthiest. In Google, trend line, where was it? Okay. In general sake, boom, this was our trend line, and then it broke. It did come down here, for a day or two. But here already, it's been trending lower. Excuse me. Interruptions. Anyway, so Google here, don't usually buy things right after they split. If you were in it and you were short, you can still hold on to it. But typically people will now follow these trend lines and so forth, based on what they were. And that's why these graphs get readjusted. But you still own the same amount of value of the company. So you still own the same amount of, $1,000 worth if you had 1 share. You just now have 2. So the valuation doesn't change of the company. Okay, so next one, we have Facebook. Again, couple days run to the upside, pulling back. And look at that, 1 bar pulls back and takes out 3 days worth of gain. 3 days. And that's the thing you got to be careful of, is when stocks are pulling back like this is what you're watching for. And it's going to come down here. It's going to test this 60 level, which it did, and then it broke it. So it's going to test this price range. If it gets under that, where can it go? Well, next stop would be right around here. We got, because it used to do the stair-step pattern with the Facebook. So, and then the next one probably right around here. If we take a look at the weekly, kind of comes out the same exact way. Those are the price levels you should be watching. So you got the $58 range, you got the $54 range, and the $45 range. So what do? Well, if it breaks this or right around here, if the action looks weak, then you can go short. If it doesn't, wait till it starts climbing up. Not for 3 days. If it'll be for 4 or 5 days or a week, it'll be probably climbing up. Or you get a huge burst of volume like this bar over here. When you get that kind of bar, that shows strength, okay? And then it'll continue to run for, let's see, 2 months, you know. But in that case, you got to wait for these bars to come into play. Otherwise, you know, you're trending lower on higher volume, and that's not good. Check out the Stock Trading Foundation course. I talk a lot about these concepts in that course. LQDT, and if you have the course, just review it, because that's exactly what we're discussing, is the A to B pattern and the B to C. Here, want to mention these stocks. When they break for a while. Okay, see the volume coming in? Boom. 3 days worth of gains taken, or 3 days worth of trading taking out, let's see how many, couple months worth of gains or to the upside here. Now again, I wouldn't trade this stock because see, look, it's going to the downside, obviously. But that's what they do. They go in this pattern. They don't go straight down. So you got zigzag pattern that I want to mention. Okay, zigzagging pattern. So it comes up, and usually if you think of it as it comes back up 50%, so from here to here it comes back up 50%, which would be right around that level. Okay, so let's delete all drawings. Okay, so we got 1, and where would it come up? 50%. Right there, and it's testing there. So that's what they do, and they keep going. And if you watch any stock, you'll pretty much check out the 50% often, because it's a pretty common 50% halfway point. Think of it as a wave, you know, where it'll come back 50%, and that goes to the upside or the downside. ETFC. Okay, this one, I'm moving lower again, breaking this 50-day. And I watched the 50-day not as a full trade confirmation. Okay, it's not saying that, hey, now it's time to go short. No. It's to watch everything together. It's another confirmation. First thing I'll check maybe is the price. Where's the price at? Where's it been? Where's it going? Well, how's the action? Action to the downside. So chances are this one's heading lower again, or it might test this 24 and then head lower, because look at this volume that's kicking in, right? That's what they do. They'll retest the levels and then they'll roll over. Okay, they'll retest and then they'll roll over. Here, ENZY, long level right here. You can see what it did here, right? As it went higher, it came back to test a level. Test what level? The level that it wanted to test. I don't know. We don't exactly always know what levels it's going to test. It's just doing some testing. Then it'll pull through, play around, do its movement. It'll come back, test it again, and then do its thing, and then come back, test it, broke it, and boom, now continuing lower. So how do you play these things? Well, when it's testing the level, if it's breaking to the upside and it's testing it and it's moving higher through that level, that's when you go long. If it's moving lower through that level, that's when you go short. But you're watching levels. And that's when you get in and get out. And then you always take some profit. So as this stock continued to move higher, as it went here, take a little off. As it went here, take a little off. As it went here, take a little more off. It came down here, you could hold it. Came down, it's still holding that level. Maybe broke it right here, exit the position, done. But you took already 3 times off, and you got maybe 10% remaining. So most of the stuff you already profited from. So anyways, next one, SPLK. Same thing here. Could have entered it on the 8-day or the 50-day, broke the 50-day, moving lower. Little consolidation, holding, testing area, boom, again, lower. That's what they do. Look at the weekly. Look at this. Perfect, nice trend line right there. Break. Boom. Now we'll go to the 50 on the weekly. And if it breaks that, this stock should head lower to, who knows, let's say 42, maybe 26, but more likely 48, because it's a pretty high power stock. And if it goes halfway halfway from 93, so let's say about 45 should be right around there, 46, 45, right? So that's the level we're watching. Boom, broke. You could have played it. It's another play. Lots of opportunities out there. It's not about always trading every single stock. It's just about finding a few that you like, enjoy watching. Maybe it's even interesting. You like to read about them, what's happening, what's new, what's coming out, and then trading them. You know, watching how they move and act. Adobe, same thing here. Boom, moved up. Got the break, tested that level, right? Tested. How did it test? Boom, right here. Tested it. Came down, broke it. Holding, testing. Boom, here. Again, testing. So here, we're testing right there. We're testing it here. We're testing it here. Bounced off of it, broke. Bam. There was the break. And you could say, okay, we tested this level too. Okay. So there was our consolidation pattern. Broke higher, consolidate again. Now we went lower. Okay, so we could have went short here or we could have went short here. Now it's testing again here on the short side. So if you would have went short, this would have been the place. It tested it. That's when you add. You add to your short. Broke it again. This is another place you can add. And where is it going to go? Probably right here. It'll retest this level. If not, and it continues lower, it'll test this level right here. And the reason I say that is because we got this gap right here. There's this gap. Okay, pretty big one that it didn't fill, and it needs to, or it should, and it sucks it in. Those gaps, it just sucks them in. So so that's what you want to do with these kinds of stocks, is watch the levels, see where they're going. And they're not going to hit these levels perfectly. Like you'll notice right here, we got a little bit of confluence. And what's confluence? Well, I'll give it to you briefly in this way. Say you tell your friend, hey, I'm going to meet you at this restaurant at 5:30. Okay, you will probably show up at 5:27. Your friend will show up at 5:32. Even if you guys show up at 5:30, you know, you said at the restaurant. You didn't say specifically at the table, the second table on the left, in the third chair. You know, you weren't specific enough. And I know I'm getting a little too technical, but how specific are you when you meet a friend at a restaurant? You just say what restaurant, you say what time, and it's within 5-10 minutes, sometimes 20 minutes. Somebody's late. Sometimes you might be in the restaurant, sometimes you're out of the restaurant. You look for them and you find that area, right? Then you meet your friend, you see them. Same thing here in stocks. You're not going to find a perfect 5:30 on the dot time where you're out there. Even in the Army, they're not that precise, or the Navy, whatever. You know, somebody's always at the end of the line, somebody's at the front of the line, okay? Somebody's always there sooner, somebody's always there later, even if it's a few seconds. Here, this is confluence, okay? It's moving. It's trying to find the level. So when you think of levels, think of them in little ranges. So let's, instead of doing the line area, let's see if we can do a box area. Okay, so think of it in like a region. So that's like a little region area that it has to clear. Think of it in that sense. So again, right here, like a little region zone that it has to clear. So think of it that way rather than just a price level specifically. Okay, and price line, of course. Boom, broke this trend line, went up high, dropped, retesting again here, rolling back over, right? These are just some stocks, some ideas, some charts to look at, some ways to look at it in different ways. And that's just some of the stuff I was watching. You know, I was more specifically focused on Amazon. That's why I tweeted about it. And of course, Netflix had a great run here. Short side, 84 points. Okay, things that are holding up somewhat well. FSLR broke it here. Now it's just consolidating here. Bam, bam, holding like a little pattern. If it comes back and tests here, this level right there, it'll actually be healthier. Test that level and then come back, but who knows? Time will tell. VTNR also broke it right here. Broke, consolidated a little bit, continued, but it's a cheap stock. These usually come back. So look at the past volume, nothing great, huge volume, and now volume increasing to the downside. So be careful. These usually, like I talked about the penny stocks, watch the penny stocks video, come back, and it'll probably come back $4 pretty soon. And some of these are actually hard to short because there's not enough shares to short. And then PSI holding up okay for now. Descending trend line. Pops, again, $5 stock. Be careful. Probably will come back to 420, maybe even 377. NVDA. Talked about this one for a while. This one was on my radar for a long time. I looked at this one on the monthly because this one I knew it was going to break. It was 95% sure. Never 100% sure in the market, but 95% sure. I'll show you exactly how I built this one. Okay, I looked at this. This was the monthly. This was the monthly build. I saw this setting up right here, this little trend line, little consolidation pattern. If we take it out to the weekly, well, I looked at this highest area too. If we take a look at the weekly, you can see there it is. Not perfect, right? So let's readjust a little. Okay, there's our consolidation pattern on the weekly. There's our highs. Okay, and this is what I would predict they would get to, $20. Okay, so this is our weekly. When it broke here, I tweeted about this one. Bam, broke here, descending flag pattern, and now it's kind of still isolating. So you could think of it as a little consolidation pattern. If it helps you look at it that way, look at it that way. And then if we break it down to the daily and we look at it that way, you can see there it is hitting a few times. Here it is hitting twice. It broke here, high volume, multiple days, and now it's consolidating. Okay, so this one's kind of holding up. Again, if you were in it since this break over here at the $1670 area, then I would be out at least half by now. I mean, it doesn't move too much, $2-3 at the most for this stock was the gain, but for this stock, it's a great move. Now, let's talk about some actual good moving stocks here. PACW. So here we go. This one, here we are on the rapid fire. Moving up last couple days, we do have this gap came in, so always be careful of those gaps. Can come back, retest it, but it broke descending trend line, right? You could say descending flag pattern. Broke, right? Confluence right there. Not going to be perfect at 530, okay? Broke out on okay volume. Not great. The volume the last week was a lot heavier on the downside, and then it started picking up steam. So this one was a little more cautious to get into, but now this day it surpassed those other volumes. Okay, so it's making highs on heavier volume, so that's a good sign. So if you got in it here and you took a light chance, or you got in it lightly, this would be kind of your confirmation, with the only thing is to worry about is that gap. Okay, so that's kind of how you look at that one. JSJK. This one as well. Here we go. Descending triangle or a consolidation pattern here. Wedge breaking out, heavier volume, moving up. This one doesn't trade a lot of volume. It's only 35,000 shares a day, so it doesn't have a lot of liquidity. So be careful trading this one. If you're trading 1,000, 2,000 shares or less, that's fine. But here, moving up to the upside last couple days. PRSC. Also, this one, again, not a ton of shares traded, but 300, 400,000 shares. So again, huge consolidation pattern here, and take it out to the weekly. Here's our weekly. Look at it this way. Nice consolidation pattern. Almost half a year. There's the break. Wait half a year, wait for the break, enter 20,000 shares, get your run. That's it. Okay, you can't trade 20,000, then get your 1,000 shares, get your 500 shares, get whatever shares you can get. But you're waiting patiently. This is a patience game. You don't have the patience, you need to have the patience. Go do some yoga, do something teaches you some patience. Meditate, read a book. Get some patience. It's rewarding, I'm telling you. RDNT, same thing here. We had one break here. Talked about this one. Boom. Cheap stock. I wouldn't trade it personally, you know, but if you are into the penny stocks, here it is. Boom. Break. Moving higher. Again, second time, moving higher. Okay, so you got two opportunities there. Pretty easy. In here, you're just watching and managing your position. That's all you're doing. Going to the beach, taking it easy, or in here, you know, going to the beach, taking it easy, maybe peeling some off here, going to the beach, again adding to the position. Okay, so that's how you play it. OFIX, same thing here. This one, you could do it here. Here's the consolidation pattern. Break, enter the position, then go to the beach, hang out, add to the position. There's the break again, all the way over here. Go to the beach, peel some off, and you know, enjoy the run, enjoy the profits. And ISRG holding up well. This one I saved for the end. It's a little more dangerous. It's not a hugely liquid stock. It does trade 1 million shares here and there a day, but this one runs very fast, very quick. If we take a look at the weekly, and I like watching this one on the weekly more than the daily, you can see this stock's been all around between 250 and 590. So it'll go around. It'll move quick when it moves. So here was the price level to watch. Here's another price level to watch, because the chart's a little messy. But when it does break, you know, it runs pretty quick. So you got 64 points in just 3 days. So obviously you wouldn't have known that, because the break actually happened right here. So you would have gained 39 points. Still, great run, right? 39 points. Can't beat it. All right, so that's kind of the wrap up. I tried to do a lot of stocks very quickly. Hope you enjoyed this concept a little bit. I apologize if I was a little quick. It's just another little concept. I just wanted to get through a bunch of stocks for you. Haven't tweeted as much the last couple days just because a lot of house projects, also waiting on the book proofing. So the book will be here soon or shortly. And we're going to do a review on that before it's live and launched. And it's just going to be quick little tips for stock traders, you know, something different. Not like other books that just get too technical, but, you know, maybe I'll make one of those as well for some of you that like to read rather than watch videos. Different people enjoy learning in different ways. So in either case, that's the recap. I hope you guys are trading well. Again, you don't have to trade 50, 100 stocks. Just find 1 or 2 good ones. Find 2 or 3 that you can really relate to, and then trade those or watch the setups, or just have others on your watch list. But do you need to be actively looking at 50 stocks in a day? No. You can be scanning them, but don't buy 50 different stocks in a day. You know, buy maybe 1 or 2 and then play with those or hold those for the next week. And that's how you really trade. Like this one, hold it for 3 days, right? So you got in it, waiting for the time, got in it, waiting for the setup, and now you're holding it. You're taking it easy. You're going eating sushi, enjoying life, spending time with the kids. That's what it's about. All right, thanks for watching. Hope you're doing well. Send me a shout out, email if you have questions, on Twitter, whatever, and I'll try and answer it as best as I can. Thanks again, and I look forward to seeing you next time.